This is Oliver Slope with Blue Line Futures, back in the saddle here at the Chicago Board of Trade office. Hope you're doing well. Hope everyone in your family is safe and healthy. And with that, let's kind of get into the mix of what we're looking at today. Now, remember in the past we used to do the 2-minute drill from the edge of the trading floor on Thursdays and kind of give you a little bit of a technical and fundamental backdrop at what we're looking at in the grain markets. We want to continue to put that information in your hands, and this is kind of a way for us to do it and maybe give you a little bit better visual as well to go along with some of the verbiage that we often talk about. I want to first kind of look at this Grain Express. This is what we send out to clients and subscribers every single morning, and it gives you a little fundamental, a little technical blurb. Today was obviously a little shorter in nature. Not a whole lot going on as corn continues to be a stick in the mud, but I want to break down some of these technical levels that we often talk about. As you can see here, 3-star resistance, 320 to 325. That's a brick wall, and as you can see here, this is the pocket we're talking about. It has been a brick wall. This was previous support right here, the breakdown point right here. A lot of interaction between the bulls and the bears as far as volume goes, so we need to see consecutive closes out above this pocket to really spur additional short covering from the funds. As you can see here, funds, as of Friday's Commitment to Traders report, short about 245,000 contracts, which is a big position, especially at this time of year when there's still a whole lot of uncertainty and a lot of bad news already priced into the market. So if we get some technical closes out above this technical resistance pocket, I think that could potentially take us to this 4-star level, a little bit more significant. This 330 to 333. This was previous support right here, and the breakdown point right here. So previous support now becomes resistance going forward. That's the next line in the sand if we can chew through this 320 to 325 level. Now, is the bottom in? I'm not so sure that it is just yet, but it looks like we're starting and continuing to build that process. We often say the bottom is a process, not necessarily a point, and I think we've taken the steps in the right direction. We've been making a little bit higher lows and higher highs. Very, very gradual, but again, we need to see something going here in the very near term to get out above here. A failure to get any momentum, any technical legs above resistance in the very near future probably keep us in a sideways range-bound trade. 316 to 317 3/4 has been our pivot pocket. A close below there, if you're long, you really want to consider lightening up. And a close below 308 to 310, that's this area down here, is really where you just rip the Band-Aid off and look for a new setup. So from a risk-reward perspective, everything's pretty defined here for the corn market. And these are some of the technicals we're looking at through this week's trade. If you have any questions, please feel free to give us a shout. You can email me, Oliver at Blue Line Futures. Again, remember, futures trading involves substantial risk of loss and is not suitable for all investors. Look forward to hearing from you soon. Thanks.